Welcome guys to TCM Education. In this video, which is a continuation one to our video from yesterday, and the title was "Yes, you really can control your day trading risk." And of course there will be people that will immediately say no you cannot, and others will say yes you can, but and I'm showing in this video, which is again I'm not giving only two examples or three like we did yesterday. We're going to go back to the same list and analyze more stocks, including stocks that have huge volumes and big and huge success in terms of the trend, and others. I mean, this is not a random list. You can say that it is arranged by gain over the last trading day, which was Friday, June 13th. So again, very simple screening here. We're looking for volume over 1 million shares, a price range above $15 up to unlimited, as long as the volume is good. And important adding to this search is to look for stocks that have a range of more than 5%. What does it mean? It means that if the price of the stock is $100, the range is at least $5. Why is that important? Because if the range is minimal, how would you be able to trade anyway? So if there is no range, no reason to look at that stock. We want to look at stocks where the range is significantly bigger than the average. Okay, so if you remember yesterday we analyzed CRCL and FRO. Today we're going to analyze the SADG, and this SADG, but it didn't fit the profile. Let's look at for just a random number, SPRY. Let's take a look at the volume, 1.17. That's already a red flag to me. I don't want to go to the bottom of the list in terms of volume. So let's go. Oracle, we already know it's a winner. DAR, I think we analyzed it as well. You know what? ELVN. Okay, let's go with ELVN. It's a $21 stock. Never heard about this symbol, but that's fine. Okay, let's see what we do have here in ELVN. First of all, the stock, if you paying attention, it gaps down at the open. Wow, this is really weird. Gaps down, then moves up, creates here at 2050, I'm guessing. Let me check out the okay, amazing 2050. So we have the entry point here, assuming we're watching it, which is not a guarantee because the stock gaps down, and by the time it's doing this bull flag formation, there are no guarantees that we can even watch it. Most likely no, we're not going to watch it because it's not a big mover at this point. But this is 2050. Now where is the stop loss? Let's see if we can use a 1% stop loss. Obviously not. Okay, the stop loss will be, if I'm trying to minimize it, at 20. So it's 2050 versus 20, that's 50 cents. That's more than 2% on this trade. So let's call it 40 cents, which is 2%. Does not necessarily fit the bill. Okay, so we'll move away from it into another stock. But again, in this case, of course, there are other issues that you can consider if you're even watching, which is this bull flag technical pattern. Now, of course, I know that the next question is who the hell is watching ELVN, and I will have to say nobody. So okay, let's keep this idea, move to another one. Again, I'm doing things at random without any preparation, just to make a point that it is possible to search, find, and act. Let's look at this one, Calumet CLMT, up 6%. Let's check the chart. Okay, the same. Okay, I think I have something to work here. So the same move fast in the morning, then the bull flag formation. In this case, the bull flag is let's call it 20 cents. But I don't want to use the bull flag. I want to use another scenario. I want to use this scenario where the stock shows clear support. Take a look at this support level. That's going to be a late trade, 1480. And when I use this support level here at 1480, okay, to enter and post the 1% stop under 1480. So if my stop loss is 1480, okay, let's call it 15 cents is 1%. So my worst case scenario entry is going to be 15 minus 5 cents, 14.95. So in this case, what I'm doing is either I can enter at 14, even if at 14.90, and use a 10-cent stop loss, being that I have a clear support level. Let's say that I'm doing it, okay, and my stop loss is going to be under 14.80, and in this case, I can take a position of $20,000. Let's call it 10% of risk is going to be $200, and I can come up with okay, 1-to-1, maybe 2-to-1, which is not impressive. But what's clear here that it is a success, and obviously it's not a guarantee that the trade will be a success. What is guaranteed here that if you observe the clear support level, okay, you can enter even at 14.85, and then the risk on this trade is not 10 cents or 15 cents; it's only 5 cents. So instead of being 10%, the risk is 3%. If the risk is 3%, instead of buying a position of $20,000, maybe you can upload more. Again, I'm not sure about the volumes here. In CLMT, there's also the factor of the late timing in the day. So there are other factors to take into account. But clearly, if you're doing your price analysis and involving or going to resolutions where the stop loss, instead of being 15, is 5 or 6, okay, so you carry half of the risk. Of course, you can take the same trade with the same quantity, but on paper, being that your maximum risk is, in this case, 1% of $20,000, which is 200, that fits the bill. Okay, so $200 is the risk stay the same. Only in this case you buy a $30,000 position, or maybe a $40,000 position. In this case, you can definitely increase your risk reward. So if the stock moves 40 cents on a 5-cent risk, that's 8-to-1 or 7-to-1. Let's take into account some slippage and maybe spreads and stuff like that. Okay, that's not an impressive example, but I think it fits the strategy. Now let's look at some short ideas, because as always we want to play both sides of this market. Okay, and in the short ideas we have PRO. Let's see the volume, 2 million shares. VEON down 18%. Let's see the range, 13%. That's great. DFDW, DFDV, I think it's not shortable anyway, but the volume is 2 million shares. I want to see more volume. Okay, let's go to look at VKTX. The volume is 6 million shares. The range percentage 9. Fine, that's fine. Okay. Or did this line stay here? I don't know, but okay. So what do we have here? A gap down, a reversal higher, and then the break, the first break here under the lows of the day. That's 2750. Let's call it 2750. Now, can we trade 2750 entry with a 27.5 cent 27 cent stop. Okay, so if I'm shorting at 27.50, the stop loss here is 27.90. Okay, it's a little bit steeper than it's 40 cents instead of 27 cents. Okay, let's take a look at another entry. I'm looking mainly at round numbers and clear. Okay, I think I have one. Hold on a second, guys. For some reason, ignore this blue line, which is kind of stuck here on my platform, this long one, but take a look at this reversal. Okay, I can obviously use 27.20 or 27 for a short play here on this move. All those ideas eventually worked, but take a look at this consolidation here. Again, if you observe it, let's say you don't observe those, you can use the 27, but in this case the risk will be more than 2%. It will be 50 cents. So the round number is still a very good trade, but it doesn't fit the strategy of no more than 1% of risk. I mean, you can take the 1% of risk and post the stop loss at 27.25. It's not technically the right place to be. You want to be with also 1% plus the chart telling you that the technical level is the right one. So in this case, it doesn't fit the bill. But the reversal from 27.35 here, let me show it again here. Yeah, 27.30 and highs of the reversal 27.50. Okay, that definitely fits. So let's go with this idea. 27.30, 27.50. That's 20 cents. It's less than 1% on a $26 stock or a $27 stock, which is 27 cents. So again, this fits the bill. This short here at 27.30, and look at the result. Okay, it goes from 27.30 to under 26, down to 25.60, and closes at 26 at the close. So that's 20 cent risk, and this is the maximum reward. Of course, you cannot take maximum reward. Let's use this 26 as the final target at the close. So still, this is $1.30, risking 20. How much is it? 1 to 6. That's a one. Again, amazing risk reward. Okay, and again, the nice thing here is that you don't have to push yourself to the limit. You decide up front, assuming this stock has shorts and it's very liquid. You want to short $10,000, $20,000, $50,000. I'm not going to get into unreasonable numbers, okay? But if you short here $30,000, that's 1,000 shares here, and you're getting 80 cents out of this. More than that. It was $1.30. That's already a very big number. Late in the day, out of a stock that normally you won't trade, but again, if you use this precise, very little risk strategy and apply it in the right place technically, it can lead to, I don't want to say amazing results, because it also needs practice, needs development, but I think it should be taken into account by anyone that's day trading. Guys, please leave any comments and share this video with your friends, especially those who day trade. Thanks a lot, and we'll see you in our next video.